What's up, guys? Eric here, Mr. Fired Up Wealth. New month, October. And you're asking yourself, are there any stocks that I should be looking at to add to my portfolio? Maybe you own these stocks and you might want to nibble. So what I've done, guys, I've looked through my portfolio. I've hand selected 3 stocks that I own that I think are attractive at these levels. I'm going to break them down for you, give some technical points of where you might want to add some shares. Now, I'm a long-term investor by trade, and so generally when I'm using technicals, I'm trying to find better entry and exit points on companies I believe in long-term, and I've done my due diligence, I understand the fundamentals, and I have conviction in these stocks. You're gonna wanna see this one, guys. Top 3 stocks to buy in October. Stay tuned. Coming right out of the gates, guys, with Nvidia. You know I'm a big fan of this stock. I've covered it on the channel several times, and if you want deeper dives into Nvidia, check out the channel, make sure you subscribe, hit the little bell to get notifications. So Nvidia, guys, it's showing here on Fidelity a 73 P ratio TTM. The PEG ratio 5 years 2.24. Now this stock is a $512 billion market cap, so a very large cap. It could be the next $1 trillion company, and I think it'll get there with some time. It's made a massive run, so a lot of people think, well, it's too expensive here. The thing is, the growth has accelerated. They have a lot of secular growth trends behind them, a lot of these mega trends. When you think of EV, you think of AI, you think of gaming, you think of crypto mining, and much, much more. NVIDIA's got you covered, okay? It's a fabless. They do have to rely on foundries, so there's some risk with that, of course. And they do have some competition, but these guys are best of breed in many levels, especially when you think of data center, okay? Now they're trying to acquire ARM, and that could get rejected, which could cause the stock to crash anytime if that happens. So if you're buying this stock, make sure you're aware of the risks. Now this thing, I made a video and I said it was going to climb up to 230 bucks, and it literally hit $230.43. If you watched that last video, found resistance and it's pulled back. Now, we've had a greater market sell-off. The QQQ, the NASDAQ, is basically down 5% from the top. So this is what you'd call a garden variety pullback or sell-off. For a correction, you need 10% or more in the greater indexes. Now, a lot of these growth stocks have actually pulled back, 20, 30 more percent. Nvidia, went from 230 to 205, so a nice little pullback. And of course, this could go a little bit lower, and I'm gonna show you the levels of where I might buy the stock. So before we look at Nvidia's chart, guys, if you like this kind of stuff, I do chart day in Discord, Patreon every single Wednesday at 9:00 a.m. Eastern. I literally take tickers from the community. They tell me what to look at, and I look at charts and give opinions. I'm not a financial advisor. I can't tell you what to buy or sell. I've been, trading and investing for over 20 years, and this is just my experience and knowledge and opinions that I'm sharing with you guys. So looking at Nvidia, I'm going to make this camera a little bit smaller. So if you look at Nvidia, you basically have these red lines here. Last video I said it was basically going to break out. We had that split. I said it'd run up to about 230 bucks. It literally went to 230, pulled back. Now the question you have is, where's it going from here? So I've pulled up my moving averages, okay? So this green line right here, this is the 50-day moving average. The yellow line is the 100-day moving average. This red line here is the 200-day moving average. Now this yellow line, this straight line at $178.66 is essentially the bottom of that wedge where it broke out. It definitely has strong support there. I don't think it goes that low. You can see it broke the 50-day. It could literally bottom out any day. 205 could have been the low range. It could go a little bit lower, and this is the range I'd be looking at if it did go lower. So this 100-day moving average, this is about $194. It's trading around 205, 206 right now. I think anywhere in here is an opportunity to add. Of course, the downside risk. It could go to 178. The 200-day moving average is way down here at $165 in that 200-day moving average. I don't think it's going to go that low. The sentiment is really bullish. I'm going to put something up here on your screen. Take a look at that. Most of the analysts are still recommending a buy, $250 price target. And this is one of those stocks. It's kind of that blue chip, high quality, high growth type stock. So it's not nearly as risky as a lot of the other stocks that maybe invest in when you think of the SaaS type names that have crazy multiples, and I buy those stocks too, but I want to look for some quality in my portfolio as well. Nvidia definitely brings a great blend of quality, of management, of safety, in my opinion, as a long-term investment, and I think it's an opportunity anywhere around 200 or less. I would be adding to my portfolio. I already have a full position. I've been in it for a while. Here's my position on the screen. This is where I'm at. So I've had this thing for a little while, and I continue to hold it. I'm going to hold it long, and I'm probably not going to add any more shares, but if you don't have a full position, this could be an opportunity. So one thing to note on Nvidia, guys, it does pay a small yield, 0.08%, which is almost irrelevant, but something to at least notice. It technically is DGIF when you think of Nvidia. The next stock is Shopify. This is not DGIF. There's no dividend. This thing is about $166 billion market cap. It's a large cap. You can see that it's made a nice kind of pullback here. You can see it also made a nice run. So let's look at the technicals on this one and see where it might be headed. Okay, you can see we just covered this on Wednesday. Again, chart day. If you're interested, check out Fired Up Wealth Patreon. We do this every single Wednesday. And we're looking at technicals to get better entry and exit points as long-term investors. So when we're looking at this, we're looking at longer trends. I'm looking at 1-year charts. I'm looking at daily candles. This is not day trading. This is not necessarily swing trading. It's trying to find areas where when a stock pulls back, where I can get into it and hold it for a long period of time, usually several years, okay? So downside prevails on Shopify as long as 1492 is the resistance. Now, the possibilities is it could hold that 337 is kind of where it bounced off of. It's trading around 356. Generally speaking, psychological levels like, exact dollar amounts like 1350 could be a buy area, but it did break that and it could retest. It could go lower. If it does do that, the 200-day moving average on this is $1,304. It could go to 1283. The lowest support I see in my charts is 1225. I don't think it'll necessarily get there unless the whole market takes another leg lower. It could certainly hold up where it's at. I think it's an opportunity anywhere where I have this yellow line circled, basically where it's at around 1350 down to, as low as 1225. It more than likely holds the 200-day moving average of $1,300, and it could even hold up where it is now. Now, the third stock to look out for in October as a possible opportunity is the trade desk. Now, again, all three of these stocks I cover on the channel, and I've got deep dive, analysis on these. So subscribe to the channel, check out the other videos. Today, we're just kind of looking at technical areas and a high-level overview of where the stocks are at. So now this one's closer to 127 PE ratio, a little bit more expensive. It's a smaller cap than the others two. It's considered a mid cap, around $32.5 billion. And you can see that it made this nice bounce. This is another one that did have a stock split, and we did a video on it and said to buy, and it literally just ran, really hard from that point. So if you would have bought around May, June, that stock split happened, it ran all the way to $97 before it got resistance. So it's pulled back, guys, from $97.28 to $67.81, and it was a low of about $67 in that range here over this last couple of days sell-off. So let's take a look and see where it might be an opportunity. Okay, trade desk. You can see we drew this up on chart day again as well. You see that red arrow that kind of is pointing down. So these are the possibilities here. So $78 is the resistance. The downside possibilities, $67.37, which is this previous low that goes back to a couple months back here. You can see $67.37 right here. And you can see it's broken all the moving averages. So it's broken all three. And generally, when you see it break all the trend lines, it could put some pressure on the stock and it could make it go lower. That's why I'm bringing it to your attention here today. So it could be an opportunity here, and it could bottom. It could actually bottom where it was at here around $68, and it could go higher. I think there's a chance it could go lower, and I think anywhere in here is a good opportunity. Now, this is a big range, and I realize that. You're looking at 65, 62, and 59. I think it probably, easily holds the $60 range. It probably holds 65, and it's still an opportunity, in my opinion, for a long-term investor, even in here. Now, this is probably the highest risk maybe of the three, just because the valuation is a lot more expensive. But Shopify is also expensive, and all three of these stocks, guys, they're high risk, high reward type stocks. So don't get me wrong, but they're quality names, they're quality companies. I have conviction that all three of these will be around for a very long time. And if they go a little bit lower, I think they can be a great opportunity for a long-term investor. I appreciate your time and attention. If this was helpful, drop a like, drop a comment. Please subscribe to the channel. Have a great rest of your day, guys. Take care.